Welcome back for another Polygon Matic price prediction analysis, and in this video I will be giving you areas that Matic needs to continue holding above in the next coming hours and also weeks, and also an area that we need to see a break above for us to continue expecting higher prices. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, we are holding above the 20-day MA here on the 1 hour chart, which is now acting as support for us to continue gearing up. And the next key area of resistance that I need to see Matic break above is at around the $0.6227 mark, and a break above with that key area of resistance with a retest, then we can easily see Matic get above the $0.65 mark, and a break above other key areas of resistances, then we can easily get above the $0.7 mark. And all this is playing out after we saw this massive push to the upper side, where you can see that after getting our lows at around the $0.49 mark, we have now seen this massive bounce to the upside in a move that has now given us a high above the $0.66 mark. And after seeing the formation of that impulsive move to the upside, whatever we can expect next is a bit of a corrective structure. And what that means is that in case we don't see a break above resistance and we get rejected over here and we see a bit of a pullback over here, then there are high chances that we are going to get into this blue target area that I have highlighted here on the charts using the Fibonacci's. And I did that by connecting the Fibonacci's from those lows at around the $0.49 mark to that high at around the $0.66 mark, giving me a minimum target area between the Fib level 0.382 and the Fib level 0.618, and that is between the $0.5985 mark and the $0.5579 mark, which is the area within which we can expect to see Matic bounce within in case we see further pullback here on the chart. So in case we get rejected at around the $0.6227 mark and we continue heading further down, expect this area to also act as support and give us another massive push to the upside, where we can see a break above resistance with a retest and get above the $0.7 mark. And if by any chance we lose this blue target area and we continue heading further down, then that will be suggesting that there are chances that we are going to see a retest of the lows at around the $0.49 mark before we can get impulsive once more. And that is what I'm keeping my eyes on the short term here on the Matic chart. And jumping now to the daily chart to also give you my long-term Elliot wave analysis, you can see that Matic back in 2020 gave us those lows down there before we saw that massive push to the upside to an all-time high above the $2.9 mark, giving us the high for this first wave to the upside. Then we started a corrective structure in the formation of this wave 2 into the minimum target area highlighted on the charts using this red target area, an area that we have now fully maximized, and there are high chances that we have lows in place for the second wave. And once the bull market starts, we can continue heading further up in an impulsive move in the formation of this wave 3. Minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, and then dragging the fibs to the low of the second wave, giving me a minimum target area above the $5 mark, and that is at the fib level 1.618, which is the minimum that we can expect that third wave to the upper side to do. So that is what I'm keeping my eyes on the short term and also on the long term on the Matic chart, and I hope that video was of much help to you.